Hello YouTube, welcome back to another great video. It's your boy Josh FX. So today I want to talk about the three main components that a trader or a person who is interested in learning forex or a person who is trying to venture into this field of trading needs so that he can become a profitable forex trader. The three main components that you as a trader you need to have and you need to master so that you can finally become a profitable forex trader. So to those who are new to my channel, guys, please, if you've been watching my content and you really like my content, guys, please hit the subscription button so that we can grow this channel. So without wasting time, let me begin. So the first component you as a trader that you need to have is a trading strategy. Now, here is the case. You need to have a well-proven trading strategy. You need to have a trading strategy that fits you as a trader. What I mean by fits you as a trader, it complements who you are as a trader. In which case, I can say that you need to find a strategy that you clearly understand, it clearly fits into your daily routine, clearly doesn't interfere with any of the things, and it's clearly easier trading strategy, not complicated strategy that you understand inside and out. So you need to have a well-proven strategy, a strategy that you have back-tested it, you know how the strategy performs in different market conditions. As you know, we have different market conditions. We have good market conditions, we have bad market conditions. So you need to know how your strategy performs during good market conditions and how it performs during bad market conditions. Also, your strategy, you should know how your strategy, point of entry, point of exit, your strategy, everything that the market moves, you should know whatever you expect next, because that's also within your strategy. So you should master the strategy. You should have a well-given strategy that you understand it inside and out. You must understand your strategy, the setups that you are supposed to take. Is this a normal setup? Is this a high quality setup? Is this a riskier setup? You need to understand your strategy inside and out, totally 100% understanding your strategy. There's no buts or nothing. You need to understand your strategy like the palm of your hands. Even if someone wakes you up in the night and tells you price it has reached to a decent level, how are you supposed to do? How it needs to be on your fingertips. That's how badly you are supposed to know your strategy. Your strategy, the moment when you are in the markets and you start second guessing, please get out. You clearly don't know your strategy. The moment you start second guessing yourself is the moment you start having second thoughts about you pulling the trigger or whatever you're supposed to do, and you're starting to have second thoughts. Please get out. You clearly don't understand your strategy. So you need to have a well-proven strategy, a well-back-tested strategy. You know how your strategy performs with different market conditions, and you know that if these conditions, if it's good conditions or it's bad conditions. So you have stayed with your strategy for long enough. You know it inside and out. And I'm going to tell you that you need to have only one strategy. Do not be the guy that jumps from one strategy to another strategy. You'll never achieve the consistency you seek, because the consistency that you seek is just repetition of the same setups every day. And by the end of the week or at the end of the month, you'll find that you are consistent. So it's just repetition of the same thing. The moment you start switching, you already dismantle the what can I say? What is this called? The edges, yeah. So the variables, yeah. I have to mean the variables. So you have to maintain the variables to be constant for your edge to play out and for you to be consistent. So you need to be repeating the same thing over and over, the same setups over and over and over. You don't include new setups, you not add new setups, nothing at all. You need to understand your trading strategy inside and out. Inside and out, it should be on your fingertips. I'm repeating again, the moment you start second guessing, you don't know whatever is going to happen next. You don't know whatever where your take profit is. You don't know where you're supposed to do in this case scenario. You don't know where you're supposed to end. You don't know what the market do. If the market does this, how are you supposed to react? Please, you don't know your trading strategy. Please get out from that market because you are second guessing and you just want to gamble. You clearly don't understand your trading strategy. So the first component that you need and to master is your trading strategy, and it should be only one trading strategy. Master it inside and out. Understand how it performs during good market conditions. Understand how it performs during bad market conditions. The second point is you need to have a trade risk management plan. A clear, well-defined risk management plan. Know how much will you be risking in a given setup, because we have different types of setups. For me, I know how much I'm risking in a riskier setup, how much I'm supposed to risk in a normal setup, how much I'm supposed to risk in a high quality setup. I know how much I'm supposed to risk in an AA plus setup. So you need to know the type of risk that you are supposed to apply in each given setup, because they are not going to be the same thing. We have riskier setup, we have normal setups, we have high quality setups. So you need to know. And after you have known the type of risk management, you need to accept. There's a difference between you knowing and actually accepting the risk. After you have actually known the risk, make sure you accept the risk. So have a well risk management plan. And after you have the risk management plan, make sure you accept the risk. Do not make the difference of you just knowing and placing. You can place a stop loss and actually have not accepted the risk. That's why you end up finding yourself every time the market comes near your stop loss, you end up adjusting your stop loss, you end up adjusting your stop loss. Now that means that you have not clearly accepted the risk. You just knew about the risk and you just did because you knew you were supposed to place a stop loss, but you clearly in your mind you never accepted it and you never accepted to be wrong. So understand your risk management plan. Have a risk management plan. Have a well-structured risk management plan. No, if I lose 4 trades, what am I supposed to do? If I lose 2 trades in a day, how am I supposed to do? What am I supposed to do next? Know the type of risk that you are supposed to do, the type of lot size that you're supposed to do. If after this and this, what am I supposed to do? Am I supposed to increase my risk? After this and this, what am I supposed to do? Am I supposed to decrease my risk? That is understanding your risk management plan. You need to have a risk management plan that works in your favor, that suits in your daily activities. You need to sit down and write a well-defined, clearly risk management. If you don't have one, then I'm sorry, you are clearly gambling. You are clearly putting all your hopes in the market, and the market is not there to fulfill your hopes, because the market will continue moving whether you are in it or you're not. The market doesn't care about you, and then why shouldn't you care about the market? The market don't place your hopes in the market, because the market will always move. The market will always be in constant motion, whether you are in it and whether you are not in it. So you need to have rules that are going to protect you in this kind of environment. So have a well-defined, clear risk management. Know the type of the risk you're supposed to take on a given setup, the type of risk, what you're supposed to do if you win 3 trades, what you're supposed to do if you do this and this. Anything about risk management, you need to have a clear risk management. Do not put all your hopes into the market, because you'll end up burning yourself out. Trust me, you'll end up burning yourself out. There's no hope here. It either works or it doesn't work out. Don't place all your hopes saying that, oh, I've not paid rent, I'm expecting rent. So there's nothing like that. The market doesn't care. The market will continue moving whether you are in it or whether you are not in it. So have a well risk management plan and make sure you accept the risk. Make sure you accept the risk. Then after having a well-defined risk management plan, the next thing that you need that is very crucial, you need a trade management plan. Most of the struggling traders, most of the non-profitable traders, they don't have a trade management plan. There's a difference between you having a risk management plan and a trade management plan. So if you don't have that, make sure from after this video you go and sit and construct yourself a trade management plan. So what is a trade management plan? After a trade has been activated and the trade is running, what are you supposed to do? Then that's called what? Managing the trade. Are you supposed to just place your stop loss and just leave? Some call it set and forget. But is that if you're trading volatile stocks or currencies or what, you can't just set and forget. And if you're a beginner, if you can't have that, because it requires a lot of experience and a lot of patience. So you need to have this trade management plan where you are able to take partials within the way where you are able to monitor your trade. So when your trade has been activated, how do you monitor it? When price reaches to a certain level, are you supposed to place the trade to half stop loss? Are you supposed to place the trade into break even? If price reaches at a certain level, are you supposed to close some of the trades? After price reaches to a certain level, are you supposed to let the other trades run? That is what we call a trade management plan. If price goes against you, how long will you take for you to agree now that the market is going against your direction, and make you to change your bias and cancel the trade? So that is what I call a trade management plan. Is what basically what you're supposed to do when the trade has already been activated and the trade is running. That is what we call a trade. Most of the traders don't have a trade management plan. They just place their hopes. You need to be taking partials as the market is going. The market reaches at a certain price, I'm supposed to place the trade to break even, so that you relieve yourself from the stress of the risk. At least you've taken yourself out from the shoulder. So you have placed the trade to break even. Now it's either break even or TP. But it reaches at 40 pips. Are you going to take the 1:2 or what? So that is what you call a trade management plan. How you are going to manage your trades as they are running. Make sure you have a trade management plan. Make sure you sit down, construct yourself a trade management plan. So today this is going to be a very short video. So those are the three main components that you as a trader you need to have: a trade strategy, 2, you need to have a trade risk management, and 3, you need to have a trade management plan. These are the things that will enable and make you to become profitable. Without any of these things, trust me, you will not become profitable. Okay, so basically I hope this video you found it very educative. If you are new to this channel, make sure you subscribe. I've been your host, Josh FX, and if you subscribe, you're going to give me the motivation for me to be dropping these gems each and every time. So guys, please subscribe, and I'll be dropping my vlogs. If I've not watched my previous vlog, please go back to the next video there and watch my vlog. It was a very great vlog, and I hope to drop more and more vlogs. So guys, thank you for watching, thank you for subscribing, and see you until next time.